Yeah, good morning, everyone. So, US market is more of a flattish, and futures are also marginally up, whereas Asian markets are indicating decline. Most of the markets are down between 0.5 to 1%. That is mainly because of the dollar has started appreciating. You We had two days back talked about the concern about the dollar index, and now it has moved up by almost 100 basis point yesterday. Generally, when the dollar moves up, there is a selling in the emerging market by the FII, and that is getting witnessed first in India, mainly because our performance on the results were comparatively weak, and also the valuations were on the higher side. So we saw stress initially. But what we had seen that we are falling consistently for last 3 days, and uh, quite possible that today also we may see some decline. But uh, generally, we had seen that the fall in the correction mode doesn't move too far. So continuous fall of 3 4 days will restrict the decline, and somewhere we will find bottom for the short term. So as such, selling at a lower end will be a wrong strategy today. So at a lower end, one can look to hold on and wait for bounce back. Uh, Apart from that, commodities are also more of a flattish. Only oil has moved up sharply. That has moved up by $1.5 and now over $70 Brent. This is mainly because of the expectation of the deal between in US and Europe, and that market is perceiving that that will put some restrictions on Russian oil sale to Europe, whereas US sale of energy to the European region will increase with the deal. And also, US is talking about putting restriction earlier than expected on Russia in relation to the Ukraine war. So that has pushed up oil over $70. Overall, what we see that market is likely to remain subdued in today's trade, but we may find some bottom in near term for short term. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, the market is likely to open on a flattish note, and the range-bound trading session can be witnessed. As the sir said, from the last 3 days, we are continuously witnessing a selling pressures from the higher levels. The interesting fact that if the Nifty has trading below the 50 days moving average, which gives some sort of a cautious to bearish sign. I believe that from the current level, the selling pressure is likely to be continued in the near-term future as well, and which might take a Nifty towards 24,540 levels. A strong support provided by is the golden ratio, that is a 61.8% of the Fibonacci retracements. So more 100 points levels downfall can be seen in the coming few trading sessions, and thereafter the Nifty might find out a support nearby 25,500 to 24,500 to 24,540 levels. Up to that level, in that range, it will find out a support, and then we might witness some sort of a bounce back rally. For today intraday purpose, the support is placed at around 24,570. Below that level, 24,500, 24,440 levels can be seen. Whereas on higher side, the resistance is placed at around 24,500. On the high side, 24,000 upside may resistance is placed at around 24,700. Any move above that level will see the extension towards 24,840 to 24,940 levels on the higher sides. More positive momentums can be witnessed only if the Nifty manages to give the breakout of 50 days moving average, which comes to nearby 25,050 levels. As long as it stays below that level, the view will remain cautious to bearish. So avoid major long positions on the indices, but definitely stock specific tradings are recommended with the strict stop losses. Coming towards the Bank Nifty, For today intraday purpose, the Bank Nifty has an immediate support levels at 55,940. Below that level, 55,700 levels can be seen, whereas the resistance is placed at around 56,540 and 56,770. Coming to the stock specification, prints really looks good. Yesterday, it has touched the weight of 50 and 100 DMA moving average and shown us some sort of a reversal signals by taking support of those averages. We believe that a bounce back rally can be seen in this particular counter, which might take a stock towards to the 200 DMA, which comes nearby 2400 levels. So one can take a long positions at the CMP by keeping a strict stop loss of 53.20 for a target of 24.10, 24.30 levels on the higher side. That's it from my end. I request Amit to take a call forward.
Yeah, thank you. Good morning, everyone. So on the derivatives the front, as we have seen that from last 3 days of trading session, there has been a more than 500 points of fall in the Nifty front, and now due to that, we are continuously seeing that the call order positions are continuously getting near to ATM strikes, and the put order positions are shifting down. So currently in yesterday's session also, we have witnessed that from 24,700 to 25,000 mark, we are seeing that the call order positions got added up sharply. The only positive sign which we are witnessing right now for any reversal for the short-term trade will be from the PCROI front. PCROI yesterday closed at 0.64 level, so currently PCR is trading at oversold zone. The major support for the PCR on the downside will be 0.58 level, and most of the time the occurrence has happened that once the PCR comes in the range of 0.58 to 0.62 level, at that point of time reversals are being expected in the market. So currently, once if PCR comes near 0.5 to 0.62 range, at that point of time we can create a pullback zone pullback strategy on the index specific front, but currently as per the OI positions, we are seeing that on the short term momentum, more pressure can be witnessed while going ahead towards the 24,500 to 400 zone. The initial support for the Nifty right now will be 24,500 level, where we are seeing that another range of put order positions are getting added on. So once if whomsoever is holding the long positions on it to create any reversal trade can create with the support of 24,500 level. Once if in today's trading session we are expecting that in the first half market is likely to remain on the negative front, but if any reversals comes in the second half, then 24,500 will act as an important supportive zone. On the upside, 25,000 will be the initial resistance zone, where we are seeing that almost 23 million positions of Colorado positions are intact at that strike. So once if Nifty manages to give clearance about 25,000 marker, then again stability will be witnessed. So as per the current scenario, we might expect some sort of more selling pressure while going ahead with the support of 24,500 level, where we can witness a initial reversal zone from the market zone index specific front. While on the stock specific front, Laurus Lab, Marico, and Piramal Enterprise looks positive, while on the negative front, Loda, IEX, and M&M Finance looks negative. So that's it from the different. Thank you.
Good morning, everyone. On the result front, Punjab Chemicals and Crop Protection Limited posted the result yesterday. Result was improved for the quarter, mainly led by the revenue growth. Revenue grew by around 32% on a YY base, while the operating margins were largely stable at 10.8%. In addition to this, it is expected to commercialize new products for export markets, where it plans to invest around 60 crore over the next 2 years to set up 2 new manufacturing blocks for existing as well as new products. These products are expected to cater Japanese and European markets, with expected sales contribution of around 120 to 150 crore in the next 2 to 3 years. The stock is trading at around 33 times to trailing 12 months EPS. Paradip Phosphates posted the result. Result has improved for the quarter. Revenue grew by around 60% on a YY basis. Also, operating margins reported at 13.9% versus 6.2% in the same quarter last year. The stock is currently trading at a PE of around 20 times to trailing 12 months EPS. We will provide the update for both these stocks post the con call. Asian Chemical Industries posted the result. Result has been declining The revenue grew by around 38% on a YY basis, while the operating margins were lowered at 26.7% versus 33.5% in the same quarter last year. The stock is currently trading at a PE of 23 times to FY 27 earnings, and we will provide the update post the con call. Thank you.
Good morning, everyone. Today, Aditya Infotech IPO is opening for subscription. It's a 1300 crore issue comprising of fresh issue of 500 crores and the rest is OFS. So, company basically is a prominent player in the security and surveillance industry, having 21% market share and a strong presence of brand name with CP Plus, and they have a catchy tagline as well. Upurwala sab dekh raha hai. So, company has a manufacturing facility in Andhra Pradesh with an installed capacity of 17.2 million units per annum, and they have a R&D facility in Noida. It has a strong network of 1,000 plus channels as well. So, Aditya Infotech basically has partnerships with Dixon for manufacturing through a subsidiary and with VVDN Tech for design and technology purpose. Apart from that, it also is a trading partner for a Chinese firm, Dahua Technologies, for their products in India. Industry wise, this market is growing at 16% CAGR. So now Government of India has introduced a regulatory framework mandating cybersecurity certification from government approved labs for all the internet connected, that is IP CCTV devices sold in India. With the 9th April was the deadline. So basically government aims to mitigate risk associated with foreign surveillance. So this new rule saw some dumping of products last year with prices getting affected, due to which even the revenue growth for the company was only 12% in FY25. However, now the prices have bounced back and things are getting stabilized. So this regulatory rules also throws immense opportunity for local companies like Aditya Infotech. On valuation front, IPO is fairly priced at 53 times its FY25 earnings when we compare to the other consumer durable players. However, and looking at the growth prospects for the company, we are recommending subscribe to this issue. So the bidding date is from today, 29 July to 31st of July. Price band of the issue on the lower side is rupees 640 and 675 on the upper side. And the market cap post listing would be around 8,000 crore. Thank you. That's it from me.
Good morning. IndusInd Bank posted its results. Results is below expectations. Its profit came at 604 crore versus expectation of 897 crore. In con call, management stated that CEO selection process is complete and awaiting RBI approval. All issues related to legacy treasury and microfinance concern were resolved in Q4. Its advances decreased by 4% year on year and 3.3% sequentially, but loan growth is expected to normalize from Q2. Net interest margin came at 3.46%. It increased by 11 basis point quarter on quarter, driven by one-off recoveries and IT refunds. Its asset quality declined. Gross NPA increased to 3.64% and net NPA increased to 1.12% due to no ARC sales and write-offs. Cost to income ratio remained high due to subdued revenues and seasonal weakness. Vehicle finance business was stable. Microfinance and corporate banking book declined. MSME grew by 8% year on year, and home loans increased by 113% year on year. The bank reduced savings account rate. It cuts up to 200 basis point, and further cuts may be coming in upcoming quarters. Microfinance stress normalization could take 3 to 6 months. The stock is trading at one time selling price to book value, and outlook is neutral for the stock. Secondly, Five-Star Business Finance result is declining. NII grew by 20% year on year and PAT grew by 6% year on year. AUM grew by 20% year-on-year and 5% sequentially, but its disbursement declined by 2% year-on-year and 12% sequentially. Asset quality also declined. Gross NPA came at 2.46% and net NPA came at 1.25%. The stock is trading at the stock is trading at 3.7 times trailing price to book value, and outlook is neutral for the stock. And lastly, today, Lakshmi India Finance IPO is opening. Its bidding date is from today to 31st of July. Its price band range from rupees 150 to 158. The issue consists of fresh issue of rupees 165 crore and OFS of 89 crore, aggregating up to 256 crore. The post-issue market cap will be 826 crore. Lakshmi India Finance is a non-deposit taking non-banking financial company. It was established in 1990. Their operational network spans 158 branches across rural, semi-urban and urban areas in the states of Rajasthan, Gujarat, Madhya Pradesh and Uttar Pradesh. It has widest reach in Rajasthan. Their product portfolio includes MSME loans, vehicle loans, construction loans, and other lending products. 80% of their MSME loans qualify as PSL. Its AUM stood at 1,277 crore with MSME and vehicle loan verticals contributing to 76% and 16%. While comparing Lakshmi India Finance with other MSME focused financials such as Five Star Business and SBFC, Lakshmi predominantly caters to MSME segment with 98% of its loan book is secured compared to 100% of Five Star and 83% of SBFC. Its asset quality is broadly in line with its peer. It has an AUM CAGR of 36% over FY23 to 25. However, its return ratio is subdued with an ROA of 3%, which is lower than Five Star's ROA of 7% and SBFC's ROA of 4.3%. And additionally, on the ongoing result season has highlighted the stress in MSME segment. So, despite the healthy growth and secured loan book, Lakshmi is currently valued at price to book value of 2 times, which is a discount to peers, reflecting its lower profitability metric. Considering these factors, we are assigning neutral rating to the issue. So, that's it from me. Thank you.
Good morning. Waaree Energies result has improved. Revenue grew by 11% quarter on quarter and 30% year on year. EBITDA grew by 81% year on year, and EBITDA margin came at 22.5% versus 16.2% year on year. Patties grew on year and quarter basis, and stock is currently trading at P of 40.2 times TTM EPS. And we will provide more details about Waaree Energies after the con call. Thank you.
Yeah. Apart from this, Majgaon Dock has come up with the numbers, and the numbers were subdued, wherein the margin was a key concern, wherein the margin has come at 11.5%, whereas last year 27.2%. And last quarter also the margin were under pressure and was at around 3%. If you see the overall expectations of the yearly margins is somewhere at around over 20%. So considering that, the result was lower. Then JK Paper has shown some improvement in last 2 quarters. Gradually, the performance is improving for the JK Paper. The stock has underperformed for quite some time now. Quite possible that the demand may see some revival and the margins can start seeing some improvement. The EBITDA margin came in at 14.8% versus last quarter 12.8%. And last year, no doubt, it was higher at 16.4%. But there is a improvement which we are seeing, start to see in paper, JK Paper. that is Ratnavir. Ratnavir Precision Engineering, a small company, has reported good numbers. The result has shown improvement. Revenue has grown by around 30% year on year and 30% quarter on quarter. Margin has also seen improvement to almost 10.2% versus last quarter 8.2%. Last 3 quarters, the margins were coming down, and this quarter we are seeing some reversal of the margins. So quite possible that if we sustain, then the valuations are also reasonable at around 16 times TTM EPS. They are into mainly parts which related to stainless steel, which goes into various capital goods industries. We had seen stainless steel prices correcting in last 1 year, but now in last quarter it was stable. So quite possible the margin decline was mainly driven by the decline in the prices of the stainless steel. And now the stainless steel prices no doubt has stabilized at a lower level. But since the cost is passed on to the customer, or benefit is also passed on to the customer, the stable prices has pushed the margin back to their normal level or marginally lower than normal level, but things can improve. So overall outlook on Ratnavir Precision Engineering looks positive. That's all from us. And I'll request technical from commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday we witnessed a fall in gold and silver. We are expecting a pullback in gold till 99, 200, 300 levels, and in silver around 1,14,000, which is the resistance area. So for a pullback, one can initiate a buy around 97 400 with a stop loss of 97 50 in gold, and in silver one can buy around 1,13,000 with a stop loss of 1,12,000. 1,12,500 seems to be a good support area. So a pullback till 1,14,000, 14,200, whereby one can book profits. And in metals, copper, one can buy the August contract with a stop loss of 893, and on upside again 900, one can take profits, wherein zinc a pullback till 269 is expected, whereby one can sell with a stop loss of 270, and for trading purpose one can buy strictly with a stop loss of 266. In crude oil, expecting some positive momentum to continue, so buying on dips around 5760, 5750 is recommended with a stop loss of 5680. Upside expecting 5900. And natural gas, we are expecting some pullback. So all in all, prices could consolidate from 260 to 280. And for as long as it is sustaining to 66, one can buy for a pullback with a strict stop loss of 260. That's it from us. Thank you very much.